Hi everyone, let's go over my micro, bullish and bearish Elliott Wave scenarios on Bitcoin. Started with my micro bullish scenario where we are looking for a three-wave structure to the upside in a WXY, currently working on wave Y, which by itself is a three-wave structure where the most common target for wave Y is between the 0.618 and the 1.236 trend-based sub-extension taken from the low to the high of W to the low of X, which is sitting between 30.5k and 31k. And what's nice about this is that the resistance area, the blue box over here that we've been looking for a while now, is positioned right in the middle of this target area for wave Y between 30.5k and 30.7k. Now this also means that the low of wave X is in, likely then to be a zigzag structure in a 535. However, after posting the video this morning, I've been discussing with myself basically, is the low of this wave X in? Or can we still make a new low before moving to the upside for a wave Y? Because with the low of wave X over here, we created another double bottom. You can see over here, we have a low, a higher low, double bottom for then maybe a liquidity grab and a move to the upside. But actually, most importantly, if we are looking for a zigzag structure over here and then a wave A, B and a wave C, there's something going on with this wave C that I do not like. If I take a trend-based fib extension from the high of A to the low of A to then the high of this wave B over here, or the end at least, for this then being the final impulsive structure to the upside, and I open all the target fibs for a zigzag, then you can see that currently price bounced on the 0.618, which is a rare target for a wave C in a zigzag structure. It's nicely respected, but it is a rare target nonetheless. If, however, you take a fib from the high of A to the low of A to the highest point inside then this wave B, right? We have a corrective wave structure in the wave B. And if I take it to the highest point over here, the highest price in this wave B, then you can see that the one-to-one has been hit. However, taking this pivot over here in a three-wave trend-based fib extension pivot, right, from the high to the low of A to this one over here, this one for me does not make any sense because it's, as I see it now, part of an expanding flat ABC to the downside. So this one cannot be taken, in my opinion, for a valid trend-based fib extension estimate of then wave C. But all the other highs that were made in wave B result in the most common target area for wave C not being hit. It's always the 0.618, and that is something that I don't really like and something that I take with me in the probabilities as well, besides then again a double bottom at the downside. So that's at least something to think about and something I keep in mind. But if we go to the bearish scenario and we put the wave B over here, so now we then have a 5-wave move to the downside, then we have a corrective structure in a wave B for then eventually looking for a wave C to the downside, then you can probably already see the problem in this scenario, where if we are looking for a wave C to the downside in an impulsive structure, corrective structure and another impulse, then at the moment we have a lot of sideways price action instead of getting an impulse to the downside. And if we check the time of wave A compared to wave C, if we take a trend-based fib from the high of A to the low of A and we put it then on the high of B, let's take the red candle over here, then you can see that price is far beyond the one as well as the 1.618, meaning that the price action that we have over here is much longer at the moment than this wave A. Now yes, a wave C tends to be longer in time than a wave A, but still you want to see it going impulsively to the downside, and at the moment you can't really see an impulsive structure to the downside. So that's a bit of a problem in the bearish scenario. So even though it's a little bit weird to put the low of wave X over here because of the 0.618 being a rare target, but none of the other highs are at least reaching the 1 to the 1.236 common target, because in a bearish scenario we're not seeing like any impulsive structures to the downside at the moment, the probabilities are towards the like bullish side, right? I'll talk more about that in the probability section that is coming up. Now, if we look at where price is at the moment, and we also use a couple of other tools, I pulled a volume profile over here from the order block that we have to where price is at the moment. And you can see, you know, price has been ranging over here, very, very nice. And currently we have some support as well as bullish CVD divergences, which I will highlight in a moment. And you can see that price is currently finding support on the point of control of this range over here, as well as the golden pocket, which is taken from this low over here to the high. So now you have confluence of that golden pocket with the point of control, which is very important. So I think if this point of control is going to be lost, then if we follow the rules of range trading and volume profile trading, then you can expect price to move to the downside. But I think if price is going to go to the value area low, it is very, very close to reaching this area over here. So for me, then the probabilities go up that we're going to take this double bottom. So actually where price is ranging right now is quite important for either the bullish or the bearish scenario. If we go to the 1 hour time frame, and I show you another volume profile, then you can see again, price has been ranging very nicely right around this volume profile. And the most recent price action has shown that we've gone below the value area low, but then found our way back in, back tested the value area low over here for then a move to the upside, testing the point of control twice, 1, 2. And usually, again, in volume trading, if you get back into the volume profile, you would then expect a move to the higher side of the volume area, which is the value area high, sitting over here at 30.7K, which is part of the resistance that we have in this area. So yeah, it's quite interesting. And then finally, another confluence, if we then look at this channel, brilliant channel, by the way, for the ones that are channel trading, then what happened most recently is price going outside of the channel, backtesting the channel low, for then potentially that move to the downside, looking for the middle of the channel, which again is in confluence with the resistance area that we have over here. So it's just such an interesting area. And also all of this give probabilities to the more bullish scenario, including then the CVD divergences. If we look at the CVD divergences, then we still have CVD divergences that have not yet played out. Over here, higher low in price, lower low on the CVD, where the target is then this high over here, which clearly has not yet been taken, sitting at 34.50. So we still have a little bit up to go in this scenario. Now, the servers of AGGR, I don't know, but it's not working at the moment, which you might have seen. If you open the website, you get something like this. Doesn't happen very often, but it can happen. But I do like to introduce you to ATAS or ATAS, or whatever, you know, how you pronounce it, which is a software that you can download, and it's absolutely free. There's no affiliate links here, guys. It's just a program I use myself, where I also always every morning look for the daily naked point of controls and the time naked point of controls, right? So for example, these, which over here, the time naked point of control has been very nicely respected. So it's just a very, very interesting software, and it's free for everyone. So the website is atas.net. I'll make sure to put it in the comments. And maybe you like to check it out. Again, there's no referral here. I don't get paid for saying this. It's just, you know, I want to help you, and this is something I use myself. So if we then go to the order flow chart that I have over here, or at least the price action with the CVD line, which is still working at least in ATAS. This is the Bybit, the yellow CVD that I usually have on my other chart. And you can see that over here, price has been moving to the downside as well as CVD. But then over here, we make some very local higher lows, and CVD is still moving to the downside, creating a little bit of bullish CVD divergences. And if we then zoom in even further, then we can see there is no real bearish CVD divergences going on. Are there? Maybe, potentially, but then we have to zoom in very, very locally. With this candle over here, we do see lower high on price, but over here a higher high on the CVD. So very, very locally, we might have some bearish CVD divergences going on, where the target is then taking this low. If we take this high, then it is invalidated. But in general, what you can see is on the yellow line, actually I needed the blue line here, but on the blue line you have a higher low in price and a lower low on the CVD, but on the yellow line that is actually not the case. So that's pretty useless actually, because we can't see the blue line, the aggregated CVD line, as I don't have that in ATAS. So yeah, anyway, I know from memory that we have bullish CVD divergences here on the aggregated blue line with the target up here. And what is happening more locally is important for the bullish or the bearish scenario, with the point of control here as well, right? So that's very, very interesting where price is at the moment. If we now look at the probabilities, then, well, on the micro scenario, just because, for a wave C, you want to see a bigger move to the downside, you want to see volume coming in. Of course, if the point of control is going to be broken, probabilities might increase, but we have to wait and observe what's going to happen. But eventually, in general, we want to see this target area being hit. Yes, price can go down once more, take the double bottom, and then move to the upside, in my opinion. Or we are looking for the bullish scenario where price then moves to the upside in a three-wave structure, likely also to be a zigzag and then a 5-3-5 wave move. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.